Ladies and gentlemen, good day and welcome to the Mallcom India Limited Q1 FY2024 earnings conference call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note this conference is being recorded. I would now like to hand the conference over to Tushar from Ventura Securities Limited. Thank you and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities Limited, I welcome you all to Mallcom India Limited Q1 FY24 earnings conference call. The company is represented by Mr. Shyam Agarwal, Chief Financial Officer of the company, and Mr. Rohit Mal, General Manager of the company. I would now like to hand over the call to Mr. Rohit Mal for opening remarks. Thank you, and over to you, sir.
Thank you, Tushar. Good morning, everyone. It is a pleasure to welcome you all to our earnings conference call for the first quarter of the financial year 2024. Firstly, let me thank all the participants joining us today, and I hope everyone is keeping well. Mallcom India Limited continued on its growth trajectory with consolidated top line and PAT growth during Q1 FY24. Recorded a YOY growth of 8.11% and 23.28% respectively, with further improvement in our EBITDA margins primarily on account savings in manufacturing and other operational expenses arising out of consolidation and optimization of manufacturing facilities. During the same quarter, the company initiated land development and construction activities at its Sanand 2 unit in Gujarat. The target is to complete the civil work within the current financial year. More notably, the company introduced certified synthetic thermal gloves designed for the export market, establishing its positions as one of the pioneering Indian firms to do so. Additionally, in the recent quarter, Mallcom India Limited and KJN Housing LLP joined forces through a joint development agreement to develop a land parcel in Kolkata. According to this agreement, the company will receive a 30% share of the net revenue generated from the project sale. Now, I will request Mr. Shyam Agarwal, our CFO, to brief you on the financial performance of the company, after which I will brief on the operational highlights.
Thank you, Rohit, and good morning, everyone. In the first quarter of the financial year 2023, the consolidated revenue from operations stood at 95 crores, representing an 8% increase compared to the same quarter previous year. The EBITDA for the quarter reached 14 crores, representing an increase of approximately 19% year-on-year. The EBITDA margin stood at approximately 14.92%, representing an increase of 135 basis points on a year-on-year basis. The net profit after tax for the quarter was reported at rupees 9 crore, representing a growth of 23% year-on-year, while the PAT margin for the quarter stood at around 8.99%. Thank you. With this, we can now open the floor to the questions and answer session.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. First question comes from Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes.
Hello?
Yeah.
Sure. Sir, good results in a tough environment is what we understand, and more specifically on the export side. So first question would be with regards to how are we looking at the export markets? Any signs of further slowdown? Our first quarter, the numbers have been almost flattish to the previous year and down from the March quarter. Of course, it would be wrong on my part to compare this on a quarterly basis. So if you could just give a scenario of, exports, how do we see the growth this year? Any challenges over there or any benefits arising in any of the countries like Australia, UK, where for last few months we have been traveling and trying to generate new business, including some long-term kind of relationships? That is my first question, sir.
Right. So I'll take this. So looking at the export market, honestly, it looks a little bleak, especially because of our reliance on Europe. It has been not a good year in Europe in terms of their own economy. So interest rates are still pretty high. Inflation and they're increasing interest rates every time they meet, and inflation is also high. Unemployment is also high there. They're struggling with their energy prices. They're struggling with people spending. So it's not the best time for Europe, and maybe it will continue for the quarter is what we are anticipating before it starts getting better.
Hello, am I audible?
I'm sorry to interrupt you, sir. Rahul, sir, there is a background noise from your line, sir.
Is it okay now?
Yes, sir. Thank you. Please go ahead, sir.
Yeah, so that's the situation with Europe. US also a little bit, North America like that, not that much, but that's where we are trying to get more market share from. Other than that, Australia market has been okay. South America has also been okay. Yeah, that's the situation right now.
And any new relationships and new customer additions on the export side?
Yeah, definitely. We are every time, every quarter, we are adding new, customers. We are talking to, a couple of big ones also, in which we can have, once we enter, we can have a long-term association. So yeah, definitely we are looking at it, and we are adding new customers, every quarter, let's say.
And sir, on the domestic side, in last few quarters, you have been mentioning about the potential of domestic markets being there, considering various reasons, including the compliances. And we also are putting up a plant over there. So how do we see the domestic market in terms of the various strategies taken? How do we look at the domestic over the next year or so in terms of the growth?
Yeah, so domestic market, we've been bullish and we still continue to remain bullish. So the economy is also doing well. We believe, the spending power is increasing, the workforce is increasing, and it's a young workforce, and it's a more compliant, let's say, workforce. There are international organizations coming in with their compliances. So we are still bullish. It's going good, and we expect it to remain like this, for the foreseeable future. So we are pretty confident in our performance in the domestic market.
But sir, on the domestic market, we have been in this range of 35 to 40 crores for almost 5-6 quarters now. So where do we see, the inflection point where we can see a sharp growth on this base?
So I think every year, couple of years, and this time also we are planning for a 20% increment. We don't see, or I'm not even sure if we want a sudden spurt in growth and then not being able to maintain it. our growth has always come in a sustainable manner, and we would like to continue doing that, because the importance here is not just bringing in the sales, but also ensuring that we have the production and the quality keeping in mind, so which takes a little bit of time. So I don't think we'll ever see around a 50%, 100% growth, something like that. I think we're comfortable with, if you're growing 20%, 25% year on year.
Sure. And last one, with regards to this JDA for the real estate. So you have already mentioned that you will be. So when does it start? Typically, has the work being started, or this is just a agreement signed? And if you could just spell out the kind of timelines as to when will the first kind of revenue start kicking in?
So, Rohit, let me answer this. So, what is happening that we have just signed this agreement, and then, already there is a factory there and production is still going on. So, it will take almost, by December or first quarter of next year, we should be moving out completely from this place. And in the meantime, the process is on for taking various approvals, and so that is a target when you can see that the construction starts happening there. So maybe by the end of this financial year.
And okay, and based on the current prices, prevailing real estate prices, any ballpark figure in terms of the potential of this particular?
We have shared residential usage. So considering the the current we can see that the construction area could be in the range of around 2 lakh square feet. So it is just a guess. It depends on what market price you are able to sell that.
Sure. Thank you so much, sir, and all the best.
Thank you. Next question comes from Jagdish Singh from Shade Capital Private Limited. Please go ahead.
Thanks for the opportunity. So my question is related to the margins. So we have improved our margins in this quarter also. So what is the guidance for the full year basis for the EBITDA margin?
It should be in the range of, we did around 15%, so 14.92% to be exact. So we estimate it to be in the range of 15% almost.
So there is some price reduction in our commodities. So can we see some improvement in the margin going forward or not?
No, in that case, in our type of business, mostly whatever, price movement is there, that is passed on to the customer. So no advantage or disadvantage advantage on that front. But definitely we could save something on manufacturing because of constellation of our own manufacturing facilities. We could save, on manufacturing cost. So that had contributed into our profit margin this quarter, and it should be in the range only. Yeah, going forward also.
Okay, sir. And second question related to the turnover. So we have grown around 8% in the quarter one. So full year basis, what kind of growth we can see in double-digit growth? Or
so for the full year basis, we had projection of around 15% growth for this year, and normally the first quarter remains a little bit on the, volume-wise, it remains on the lower side. We could grow at 8%. As Rohit mentioned that on export front there is some pressure, but domestic is doing good. So let us see. We hope to catch up in third and fourth quarter. Yeah. So target remains. Let us target 15%, which is our stated target.
And my question related to the capacity expenses. So this new project will come in FY2025.
Pardon, which one? Can you just repeat, because there is some echo there.
So this new plant, when will come?
See, basically you are talking of new plant. So
yes, sir.
Recently we have set up this Ghatakpukur plant for garment unit. Now it is fully functional, and we are building up further capacity there. And the Sanand 1 project, we have just started construction there, so we target to complete it within March next year. And then from April onwards, we should be having production there also.
March 24.
Yeah, March 24, yes.
Okay. This is from my side, so thank you very much.
Thank you. Next question comes from Dwanil Desai from Turtle Capital. Please go ahead.
Hi, Rohit. So first question is if you can update on the utilization improvement at the Ahmedabad facility, and are we considering the phase 2 expansion there? Some update on that.
So Ahmedabad, in terms of capacity, utilization or efficiency, we would be at around 50-55% or so. And there is no phase 2 planned for Ahmedabad. The only thing in Gujarat now we are doing is Sanand 2. So the only objective in Ahmedabad is now to improve the efficiencies further in garmenting, and especially our kinds of workwear. It requires some time to establish the efficiency, and because of the variety of products, you are never close to 80-90%. You will probably max out at 60-65% or something like that. So our efforts is to reach the maximum efficiency possible, and for that it is important that we have a steady order flow, which, like I said, Europe is a little sluggish at the moment. So that's what we are trying to achieve in Ahmedabad.
Rohit, only to clarify this, in Ahmedabad garment facility, we have this infra, the building ready with sufficient capacity to add on to further, we can always expand as per requirement. So machinery installation is not a big problem. It can happen immediately. So first target would be that whatever capacity we have, let us utilize it to the maximum, then we can expand there also.
Okay. So given the export challenges, do we expect this utilization to move from 50-55% to a higher number this year, or it will take time?
We are expecting it to hit this year only. We are working towards it, but let's see. But yeah, that's the target.
Okay. And whatever movement that we have done to Khatagpur, is that all stabilized and up and running? And what kind of capacity utilization are we getting there in Khatagpur?
It's been built. We are moving as we speak, so we move part by part. It's not easy to just dismantle a facility where you have been working for almost 30 years and move away. There are a lot of HR, IR issues also that you have to take care of. So it's happening gradually. At the moment, it will be wrong to say any capacity utilization from Khatagpur because a lot of movement is still happening. So once maybe from quarter 3, quarter 4, we can still tell you what is capacity utilization, because then it's a more established unit. But infra-wise, machinery-wise, yes, everything is there, and now we need to move it. And also because the production is running in both the facilities, so it's not just easy to move production from one place to the other. We're trying. So yeah, hopefully by Q3 we can give you some updates about stable capacity utilization there.
Okay. And so when you move completely out of the existing facility and move to Khatagpur, I understood from earlier conversations that there will be some capacity addition. So can you quantify that number in terms of revenue or any other?
So Rohit, talking of Khatagpur facility, yes, we have, as we mentioned, that the infra is ready, the building is ready, and what we are doing, we have initially shifted some of the facilities to this new place. So capacity utilization overall remains the same as earlier. So whether it is at the older capacity or the newer capacity combined, it remains the same. So we are doing turnover, and whatever turnover, for example, if garment it was 100 crore happening earlier also, now we are doing the same thing but from two places. But going forward, definitely this place will have, we already have added some machines, and there will be more addition, and the target is to double the capacity. So we target 200 crore turnover from, the new unit going forward.
Okay. So that will happen as and when you start adding machines from this 100 crore thing stabilizes, and then you will add more machines. That's the way. It will be incremental in that sense.
Yes. It is already happening. Some of the machines are already added, and going forward it will be more. So there will be only single place factory in West Bengal from where we will be having around this target turnover going forward. Yes.
Okay. And last question, Rohit, is slightly longer term, more strategic, but we are seeing very good traction in domestic market for various reasons, and export, so we are currently facing headwinds. If I look at from slightly more structural perspective, our product portfolio is almost complete. We are into relationship with some very large customers for many years. We have cracked some of the larger markets. So given all that, how are we positioning so that we can grow in export market at 20-25%, once the global situation normalizes? Any thoughts on that? What are we doing? Some qualitative color on that would be very helpful.
So couple of things. One, like we mentioned earlier also, that North America is a market we want to crack. It's still not a big part of our turnover, and we're trying to get some entry there. So that's one geographical diversification that we have to do. The second bit is the product mix. So, Sanand facility, once that is up and running, we'll have new product lines coming in. We are also investing, like I said earlier, into head protection as well. So these kind of categories we'd like to get into. Plus, there's a lot of products or materials in which China was a predominant player and nobody was looking at India. So, some of those items are now, being wanting to be sourced from India. So we are trying to get entries into those. They are product extensions, not a different product line, but, historically not being sourced from India, and we are trying to get that part solved. So, yeah, these kind of efforts are going towards, establishing new products in the market, extending product lines, opening new geographies, and moving towards more high value added items. That's the idea.
Okay. And so my understanding was that Sanand is largely for catering to domestic market. But from what you're saying, even head protection part, some part may be utilized to kind of cater to the export market. Is that understanding correct? And is there a gap in terms of product portfolio on the head protection side for export markets from our side?
Oh, yes. So, see, facility, we are not restricting it, saying that, okay, no, this will only cater to the domestic market. We'll try and get, inquiries. When we are setting a new facility, we see the domestic market and we see the export market as well. Yeah, in domestic market, we control the flow of products. In export, it's order-driven. But we're not limiting it to saying that, okay, no, this will only serve the domestic market. We will, if inquiries come and if it's a decent response, we will serve the export market from there as well. So that's number one. Number two, in head protection, yes, definitely. We have a very small range at the moment. Let alone for the export market. Even for the domestic market, we don't have the entire basket. What competition has or what the market wants. So there we definitely need to get more products out in the market to be having a complete range. So that is being done constantly.
Okay, got it. Thanks. That's it from my side.
Thank you. I request the participants to restrict with 2 questions in the initial round and join back the queue for more questions. Next question comes from Manish Parikh from Vibrant Securities Private Limited. Please go ahead.
Yeah, this is Manish here. My question is more broader. This is regarding competition in the industry and how many players are there in the industry. And if we have some data on the market share on our products, if you can maybe share some insight on that.
So Manish, everything that I say now will be based on guesstimates. There is no market data available on this industry. The last market data I have from this industry is probably 10, 12 years old, and we are just building on to that data. So roughly what we say, the market in India is, the global market is almost $60 billion. The Indian market is anywhere between 12 to 15,000 crores. Almost half, or maybe slightly more than half, is unorganized. So we're talking about maybe 6,000-7,000 crores of organized market. And in this also, there's a huge product range. So anything from uniform that a railway or a canteen staff or a medical professional is wearing, to your harnesses and lanyards and everything come under this industry. So that if and then you can calculate. So we are doing what 120, 150 crores in the Indian domestic market. A branded sale, so you can make out the market.
So our addressable market would be, say, 6,000 crores. That is what you are trying to say.
Yeah, you can say that. Yeah, 6,000.
Roughly, it would be 6,000 crores. Where our product. Okay, and total market, your domestic market, you're saying is around 12,000 crores. Am I right?
Yeah, should be. Yeah.
Okay. And in terms of competition, how stiff is the competition, or because of the demand going up for all our products, you are able to maintain the margins? What is the situation? Just wanted to understand the domestic market.
So it is flooded with unorganized players. So, for example, for uniforms, we are up against the tailors also, who are just sitting on the streets and tailoring, uniforms.
Got it.
And then we are up against something like Honeywell as well, or 3M, who's there in the market with their range of products. So it's varied, and it's highly competitive and very unorganized also. The things that we are focusing on and where we are trying to make our market is that we are only selling certified products. We are trying to generate a brand name for ourselves, and we only deal in mostly we are trying to deal with products mostly we are trying to complete a basket of products that we can offer. So head to toe, the entire range we are trying to offer and trying to manufacture it in India itself. So, without having a lot of reliance on other suppliers, etc. So that's what we are trying to do, and that's how we are trying to address the market. But yeah, it's a very fragmented industry.
Thank you, sir. Next question comes from Yogan Jeshwani from Mittal Analytics Private Limited. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
Yeah.
Sir, last quarter you were mentioning about some distributors that you are trying to set up in the Middle East market, and then you expected that Q2, Q3 onwards there will be some business pickup from that region. So any further update on that, as in where are we on those developments?
Right. So Middle East market is performing decent. We, especially with the FTA and now, Saudi completely in an expansion mode, and the relationship between two countries probably getting better. So the market is definitely growing at a decent pace for us. We are adding we have added a couple of more dealers in those markets, and who are participating. But that market works mostly because of government tenders. So we are trying through our dealers to participate in government tenders and get those kind of markets. So it's definitely progressing well for us. We'll be participating in some exhibitions also going ahead, which should reap more benefits. So it shows a good prospect, that market.
So basically Q2, Q3, do we see the share of business coming in from Middle East increase significantly, sir?
Yeah, we will, because historically we were not there in Middle East anyway. So yeah, it should be a significant growth in the from the Middle East market.
So broadly, could you tell us what are our key markets in terms of percentages? I think Europe is one of our biggest markets. What would be the other 2, 3, 4 markets that we have?
So Europe, then should be Asia, which is primarily driven by India, which should be almost 40% probably all market share. And then you should have the South American market, which should be anywhere between 10 to 15%, and followed by North America, which should be in the range of 7% or something like that.
Okay. And sir, you did mention about the Ahmedabad facility working at 50-55% utilization. But together, if we put the entire Mallcom, currently, what is the utilization?
So overall, it is again, you can say it is around in the range of 70-80% overall, but it depends product to product. So talking of maybe safety shoes, we are selling more now, so we are almost, I would say, 90% we are utilizing our capacity. Gloves also, leather gloves also similar, but in case of nightwear gloves and garment, we can do more. But again, these capacities are all flexible. So what we can do that it's per our requirement, we can use our own manufacturing facility, or we can go for a part of manufacturing outsource, and maybe we can change the shift also. So instead of doing one shift, or as per requirement, we can go for 2 shift also. So it depends, but overall, as per the past practice, it is in the range of 70-80%.
Okay, understood. All right, sir. That's it.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I request the participants to restrict with 2 questions in the initial round and join back the queue for more questions. Next question comes from Rahul Duru from Pegasus Growth LLP. Please go ahead.
Yeah, hi. I actually missed the answer to the earlier question on the land parcel and the agreement that you have signed. In terms of what's the economics, what is the size, what is the pricing, and when do you really see the cash flow from there?
Hello. Can you repeat the question?
Yeah, I missed the question earlier. There was a lot of whistling sound. This is on the land parcel that you have signed an agreement for. What exactly are you expecting in terms of size, in terms of pricing, in terms of cash flow?
See, basically what we plan that as of now, we are still running the factory there. So by December, we plan to move out completely from this place. And in the meantime, all the necessary approvals are to be taken. So we have mentioned that the total area is around, the land parcel is around 120 10 kathas around. So the construction area would be in the range of 2 lakh square feet, considering the current permission they are giving. So it depends. The revenue should start coming only after, construction should start only after maybe up to, say, around 12 months. After 12 months it should start, and then before that we should have all the permission in place, and then it depends, how at what price you are able to sell that. So we need to see that.
And you would not be making any investment in this, and the 30% that you're getting purely...
No, yeah, it is a development agreement, so we remain the partner with the land only, and the other partner would be investing into construction activity. Yeah.
And you would basically get 30% of the overall revenue?
Yeah, for our land parcel only, yes.
Okay. All right, thank you very much.
Thank you. We have a follow-up question from Manish Parikh from Vibrant Securities Private Limited. Please go ahead.
Yeah. So follow-up to the question which was asked by the earlier person. This is regarding the land parcel. You said it's around 2 lakh square feet. So will it be a residential project or a commercial project?
Yeah, it is to be a residential project. It is within residential area only. Yes. Yeah.
Okay. And so what are the rates going on around that area in terms of the city?
You can easily look at the location and the in Calcutta market, and you can always estimate the price. We have mentioned the place there where the land is located. So you can have that idea. Yeah.
Not yet.
Got it. Thanks a lot. That's the only question.
Thank you. Next question comes from Pratik Dedia, an individual investor. Please go ahead.
Hi. Am I audible?
Yeah.
Okay. So just one question. What is the pricing power that you garner in terms of the product that you sell domestically? So I think this is in reference to the point that you had made that you only sell certified products. So wanted to understand the pricing power that you have.
Yeah, so see...
Okay,
please. Yeah.
Okay. So in the domestic market, we are a economy premium kind of a segment. We'll not be the most expensive one out there because you have international brands also, and we are definitely not the cheapest one. We are a bit above premium, like the premium segment, I would say. That's the kind of position or pricing power that we command, and we give a lot of attention to the product improvement, innovation in the product, new materials, how our products are presented also, the packaging and everything, and so that's the segment we are catering, and we deal with those kind of dealers, or when we are going to end users, and we explain about the certifications, and even in some cases certifications are not in India, but we are explaining them about the European certification, which our products comply with. So yeah, that's how I would say we are positioned.
Okay, all right. And as a follow-up of this, do you have any joint development with any of the, say, construction companies or infrastructure companies that would request a specific prototype or a product to develop for their customized need?
Yeah, there's no specific agreement. We do customize for our branded products also, and this happens mostly in case of, let's say, workwear, and maybe when the orders are large, it can happen in other cases also. So we do customizations for them, and we make specific SKUs for them as well if the need be.
Okay, got it. All right. Can I go ahead with one more question?
Pratik, sir, could you please? Yes, sir. So could you please join back the queue again, sir?
Sure. Okay. Thank you.
Thank you, sir. Next question comes from Deepa Agarwal from Neveshi Investment Advisors. Please go ahead.
Sir, my question is, I see there is some foreign investment in our investor profile. Could you please elaborate it? Like, what are the amount and what will it be used for?
Hello, I could not get your question. Can you just repeat because there is some echo? Yeah.
Am I audible now?
Yes, please go slowly. Yes.
Yeah, my question is, there is some foreign investment in our investing profile. Could you please elaborate on what is the amount and what will it be used for?
What is the amount of foreign investment in our company?
Yes.
Yeah, it is around as of now what we know that the non-resident company would be in the range of 13-14%. Yes.
Okay.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up question from Dwanil Desai from Turtle Capital. Please go ahead.
So just one clarification. So you mentioned that the Sanand project, will get completed in March 24, which is 7-8 months from now. So next year we'll see some revenue from Sanand project.
Yes. That is what we have planned. So basically, what we do that the construction of simultaneously we are placing the order for machinery and the construction also prefabricated structure would be placed there. So we are sure that the first phase of the project should be ready by March 24, and definitely thereafter we start manufacturing from there. So initially it would be synthetic gloves and helmets which we start producing from there. So definitely we'll have additional turnover coming from there in next FY.
Okay, got it. Thank you. Thanks a lot.
Thank you. We have a follow-up question from Pratik Dedia, an individual investor. Please go ahead.
Yeah. In terms of, again, going back to my question, in terms of customized request that you get from contractors, is there any long-term contract being signed for continuous supply? And if yes, then what is the contract length that you've been observing?
I'm not aware if there's any long-term such customization requirement. Usually, some companies have some annual requirements which we are fulfilling. I don't know if there's any contract which is more than annual. And like I said, mostly it happens in case of workwear that we have seen. So yeah, that's the situation. I'm not sure if there's anything more than that.
Rohit,
okay.
This we are talking of only branded and local sales, but in case of the export sales, definitely we do customization, and these customizations are mostly for long term. So what happens, you have a customer and you would like to place, do the customization for them, and then he becomes your long-term customer. So that happens in case of exports only.
Got it. Okay, thanks. This is helpful. Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. There are no questions. Thank you. Now I hand over the floor to Mr. Tushar for closing comments.
Yeah. Thank you. On the behalf of Ventura Securities Limited, we would like to thank the management of Mallcom India and the participants. Good day.
Thank you, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation and for using Doorsaba's conference call service. You may disconnect your lines now. Thank you and have a good day.